Shoppers Stop, that's the stock that we're tracking now. They've posted earnings, so revenue has come off by about 12% for the quarter, but their margins have expanded, so that's a positive. Also, finance costs have come in lower. Rajiv Suri, the MD and CEO of Shoppers Stop, now joins in. Mr. Suri, good afternoon. Thanks much for speaking with us. So first up, I want to talk to you about your top line itself, because in Q1, we've seen a fall of about 12%. Would you still say that you will be sticking to your double-digit target for FY19?
So I think the first quarter performance has been based on operational efficiencies, and what we are looking for the balance of the year is a sort of mid to high single-digit like-for-like growth.
Okay, so can you throw some light how the same-store sales growth have been in the Q2 so far? And you think you can still do the 7.5% to 8% for the full year, or can you better it?
So I think for the balance 3 quarters, we are looking at somewhere in that region. And July, we are trending towards that, so that's a good start. We were expecting a sort of muted Q1 on the top line due to the high sales of last year pre-GST sales, where we had actually a 39% increase in June last year. So therefore, we focus more on the operational efficiencies in Q1, but from Q2 onwards, we are hoping that the top line will be making the main difference.
Okay. So what's the debt that you have now, and by when would you be debt-free? I mean, would it be before Q3?
Yeah, so we started the year with the 60 crore debt. We are currently at 14 crores, so big improvement in Q1, and by end of this year, we'll be debt-free.
Okay, your margins have improved in the quarter gone by. What is your margin target by the year end? And can you do 8% before 2020, considering right now it's around 5%?
It's probably not likely to get to that vertical ratio so quickly. I think we'll have to see how the sales pan out during the year. And we'll continue to work both on the sales and the operational efficiencies.
Okay, that point is taken. But if you could quantitatively guide us, what could be the year-end margins?
So we are looking at a 100 basis point improvement over last year, and I think we are going to try and get to that number. We've had a stronger Q1, but there's still 3 quarters to go, so we want to be sure that we don't give an over-optimistic guidance.
All right, but that's looking good anyway. So you've managed to improve the revenue contribution that comes in from private labels. I think now you have, roughly about 10-odd%. How are you doing this? Is it through discounts and offers? I mean, how are you managing this?
So I think that the private brands business at Shoppers Stop, we have been having underperformance for the last 1 year, and what we are doing now is we are investing in new leadership, and we want to have a big turnaround of the private brand in the next sort of 2 to 3 years, where we want to try and have a big increase. We've just hired a head of design, we've hired a head of sourcing. We are in the process now of renting space to set up a design studio, sampling unit, as well as testing labs. In addition, we are looking for a president for private brands. So there's a big push coming. I think the big impact of all the new leadership and all the investments we are making in giving them the tools, we'll probably start to see some better traction in spring-summer 19, and I would say by autumn-winter 19, we should be in a pretty good place.
Okay, so focusing on private labels, but what are you doing to improve your revenue mix towards ladies? Because still most of your business, as far as clothes is concerned, comes from menswear.
So basically our product mix right now, our non-apparel business has been quite strong for this quarter, and this is mainly led by beauty and watches, and also we've had good traction with our luggage sales, mainly due to the trend of a lot of travel, and people seem to be flying a lot or traveling a lot. In addition, our women's wear business has been quite stable. Our men's formal business has declined in Q1, and I think that's more of an industry trend where people seem to be dressing down a bit less than they used to, being in the old days much more formal.
Okay, what's the response that you're getting from, for example, sales on Amazon? What's the revenue that you're targeting this year?
So we are already selling from Amazon our omni-channel business, which is a combination of e-commerce as well as Amazon. Roughly contributes to 1.5% of our sales. We don't give guidance of the split between Amazon and our e-com business, but we are on the Amazon site. More than 80% of our products are now listed on the Amazon site. We have a microsite. On the fashion page, we have fulfillment centers which are up and running. And in our omni-channel business, we have started a fully fledged omni-channel play where we are doing now click and collect. We are doing deliveries from stores.
Okay, but Reliance Retail has increased its presence massively. Is competition heating up in the sector? And from Future, Reliance and others, we are seeing a lot of competition being ramped up. How are you protecting your own positioning in that scenario?
So I think that in terms of our positioning, we are in a very strong position, both from a financial point of view and a department store chain point of view. And together with our omni-channel presence, we think that we are in a good place to keep our stand in the market.